Hello everyone. In this video, I will show you how to detect and backtest the strategy of double bottom. And we will use Python and I will guide you step by step. The goal here is not to build a black box strategy, but to understand every rule and every assumption we are making, and we will analyze the results. So everything here is done on daily candles. You have the code in the description, so you can change the parameters or you can try it on other types of candles. The idea here is very simple. After a downtrend, we have a double bottom structure. We will call the first bottom as the first low and the second one as the second low. And between these two, we have a neckline resistance. So if the price after the second low moves above this neckline, so we have a potential reversal, and this is where we may enter the trend. To achieve our goal of backtesting this strategy, we need to go through different steps. So each step consists of one or several functions. So the first function here is simply getting raw data from the Yahoo Finance API. So this is the same code as we use in the previous videos. We can get daily candles, weekly candles, whatever we want. So in this video, we are focusing only on daily candles, but you can have the code and you can experiment it on other data frame. And this is the columns that we are getting. We are getting the date time, the open, the high, the low, the close, and also the volume if you may need it. So we can start running this function here using the Apple stock on daily time frames, and we are getting the last 4,000 candles starting from today, which is January 2026, and this is our result, which is stored in a data frame that contain this columns, date time, open, high, low, the close, and the volume that we will not need in this video. So after that, we can have another function which is simply plotting these candles. So this is also the same as we did in the previous video. However, I added this part of the code where we can also plot swing highs, swing lows, and our strategy. So I will talk about this later. So if we run our function on the Apple market, so we have this plots, and we can, for example, zoom on some of the parts here. So we can zoom here and we can see that we have something similar to a double bottom strategy. So now let's start coding our strategy. The first technical aspect here is identifying the swings. So for the swings, we have swing low and swing high. And a swing low is identified as the lowest price within a centered rolling window, and the same for swing high. So if we are using a window of 5 candles, that means if we are picking the middle candle, so the previous or the price of the previous 2 candles and the price of the next 2 candles are above this one, and this is where we identify this candle as a low or as a swing low. And we have the same for the swing high. So basically, if we change this window, for example, to 3 or to 7, we can get a different result. So this is the first parameter of this strategy. And the problem is that sometimes some of the candles can be identified as swing low and swing high at the same time based on this window, and this is basically for large candles. And what we need to do is we need to change the window for this specific candles. So if we identify a candle that is at the same time swing low and swing high, so we are incrementing the window size until it will be only a swing low or a swing high. So this is the second function where we remove all these candles. So if we see on the Apple stock, so we were able to identify these candles. As you can see, for example, this one that occurred on 2017. So to make sure that it is only a swing high or a swing low, we needed to change the window to this value, which is 8. So after that, we need to get all the swing highs and swing lows from our data frame, which is very simple. So we are looping through the data frame, and each time we see that it is a swing low, so we are adding this information to our list, which is called swing points. So what information we are adding? We are adding the index of this candle on the data frame. This is very important, we will need it later. We are getting also the date time, and we are getting also the low. So here I'm using the low. You can use also the closing price if you want, but for me I think the low is more appropriate, and we are labeling it as a swing low or as a low, and we are doing the same thing for the swing highs. So if we want to plot, for example, this list, which is called swings here. So we have this information. So if we are picking the last candle here, so the last candle, its index in the data frame is number 25, and it occurred on 2015, March 2015, and the highest price for this candle was 32.39, and it is a swing high. We can also plot them using the same function that I showed you earlier, and we simply have rows above swing highs and rows also below swing lows. So if we zoom here on part of this plot, so we can see, for example, that this one is the lowest point, so it is identified as a swing low. The same thing for this one. So if we are picking a window of 5, that means last two candles and the next two candles, so the same thing for swing highs. So now we identify exactly what is a double bottom strategy. So we need to talk about these first parameters here. So as I said, we have two bottoms, so we will call the first one low 1 and the second one is low 2, and we have, of course, a swing high between these two. So let's say the minimum number of candles between low 1 and low 2 here, we are going to say it's going to be at least 3 candles, because we are using daily candles. So if we have only 2, so this is not a structure that we are looking for, and the maximum candles between these two has to be 15. So we are using daily candles again, and we are saying the maximum is 15. So if we have, for example, a number of candles between low 1 and low 2, which is 1 month, in that case we are not taking this as a double bottom structure, and we don't use it. So this is the first two parameters here, and we say that the price difference between the first low and the second low has to be maximum 1.5%. So if low 1 is too far from low 2, in that case this is an invalidated structure and we don't use it as well. And we have a neckline between low 1 and low 2, we will call it H, and if this H is less than 2% between the distance between H and the low 1 and low 2, let's say if it is less than 2%, we are not considering this as a neckline, and it has to be a minimum of 2%. So as you can see, we have these 4 parameters that we can change, and we have also the window parameters. So overall we have 5 parameters that we can change to have better results. So we can start applying this parameter on this function, and the first thing is that we are starting with this variable where we will store all the detected patterns. So we are getting all the lows separately, and we are getting also all the highs from our previous list, if you remember, and after that we are looping through the lows. So we are getting the indexes of the lows and we are looping through all of them, and each time we are identifying a low, so we are getting all these variables. So of course we are getting the index, we are getting also the candle, and we also get the index in the data frame. This is very important to know the number of candles between low 1 and low 2. And after that we need to check if we are in a downtrend. So we need to identify the previous high before this first low. So let's call it H0, and we are saying if we have a previous high that is above the low that we identified, so this is a valid structure. Otherwise, if we don't have a high, so we need to go to another low, and we are not validating this first low. And this is the high that we are getting, so we will need it later just to plot it for the plot. I will show you later. So now we identified the first low, which is the first important variable. So after that, starting from this variable, we are checking the next lows. So we are going through all the next lows, and each low, for example, we are getting the same variable. So the index, we are getting the candle, and we are getting also the index in the data frame. And based on this variable, we can compute the number of candles between low number 2 and low number 1. We call it separation. And if this separation, for example, is less than 3, you remember this is our first parameter. If it is less than 3 candles, in that case, we are not validating low 2, and we need to go through the next index here. Otherwise, if it is more than 15, so this is the maximum separation, maximum candle, it is more than 15, so we need to stop actually from this one, and we need to check for another low one and another low 2. So this is basically the first constraint here between low 1 and low 2. And after that, we need to check the price between these two. So if the price is a maximum of 1.2%, in this case, we are considering this as a valid structure. Otherwise, we are not going to take low 2 as a double bottom. So after that, we identified lower number 1, low number 2, and now we need to identify the neckline. So basically, we are getting all the highs between low 1 and low 2. And this is the function that will get us all the highs. So if we don't have any high between these two, that means we don't have a neckline, we don't have a resistance between the two, so we don't have a double bottom strategy. If we have two different highs, so we are getting the maximum one using this function here, using the ID max, and we are getting this specific candle, and we are checking if the distance between this high and the lows, the maximum low, is let's say at least 2%. This is another parameter that we gave. If it is less than 2%, so this is not a strong resistance and we are not consider it as a neckline, so we need to check for another low and another low 1 and low 2. So once we validate this high, we call it H. So we need just to make sure that we don't have a price that goes below low 1, between low 1 and H. So we don't have another low. So if we have another low between L1 and H, that means we need to change L1. And the same thing for L2. So we need also to check that we don't have a lower low between L2 and high. Otherwise, we need to change L2. So now we validated all the constraints, so we need to store these patterns in this variable. So the most important variables are going to be low 1, low 2, and the neckline, which is H. And we also store H0 just to show that we have a downtrend between H0 and L1. And we are getting the price, which is going to be the low for lows and the highs for highs. And after that, we can run our function and we can store the results in these patterns and we can plot them. And as you can see, we have so many patterns here. We have 125. However, you can check in this last two that there is something strange here, that in these two patterns, we have the same neckline. So the only thing that changed between the two is low number 1. So if we have this structure, we are not considering them as two double bottoms. We are considering them only one, so we need to remove one of them. So we are using this function to remove the duplicates, and we are saying if we have the same neckline, in that case, we can keep the pattern with the latest, let's say L2. You can change, you can have, for example, the earliest L2, and you can see that we removed so many here for the Apple markets. And after that, we can plot them using our function, and we can see here, if I zoom on some of these parts here, you can see here that we had a lower 1, lower 2, and we have a neckline. So this validates our strategy. And after that, we just need to check if we are moving above the neckline or not. And we have the same thing here. So now once these patterns are detected, we need to simulate each one, so each trade, and the rules are simple. So entry occurs when price closes above the neckline, and our stop loss is going to be placed at the lowest of L1 and L2, and our target profits is going to be one risk unit above the neckline. So this is going to be very simple, and there is no position sizing, no compounding, no leverage, and we are not also considering the fees of the trades, just to make it simple, and each trade is treated independently. So if price does not trigger an entry within a reasonable time window, and let's say this is our last parameter, let's say after, for example, 15 days, we don't have an entry, in that case the signal expires. So if we enter the trade, we may have different outcomes. If we hit a take profit, we will have a win. If we hit a stop loss, we will have a loss. So basically the size is going to be the same, and we can stay in the trade for some time, and in that case we can have either an expired win or an expired loss. So this is one of the last functions that we need. where we need to store the result of each pattern. So we are going to loop through all the signals, all the patterns that we found, and for each one we are getting the main variables here. So lower 1, lower 2, and H price, the neckline. The stop price or the stop loss is going to be the minimum between L1 and L2, and the risk that we are taking is the distance between the entry price and our stop loss. So basically the entry price is the neckline. When we hit the neckline, this is where we enter the trade, and the take profit is going to be the same. If you want your take profit to be 2 times the risk, so you just need to have 2 multiplied by the risk. So to keep it simple, we are risking the same amount here, and here we are getting the index of our variables. Why? Because we need to calculate the number of candles between L2 and L1, and this is our last parameter. It is called alpha weight. So basically for each pattern, to decide if to take a trade or to decide when to exit the trade if we don't hit a take profit or a stop loss, we need to wait a minimum or a maximum, number of candles. So this maximum going to be, for example, here if it is 10 candles, so the maximum is going to be 15, the max weight. So we can exit the trade after 15 candles, or we can decide to not enter the trade or consider actually this signal after 15 candles. So remember that we are looping through each pattern. So we are getting the 3 main variables, and after that we are going to check the next candles to see if we enter the trade, exit the trade, etc. So if we exceeded the number of candles, so in that case it's going to be an expired pattern, and we are going to go through the next pattern. Otherwise, for each candle we are getting all the variables, so we are checking if we are going to enter the trade if we hit our entry price, which is going to be the neckline. Otherwise, if we hit a stop price, the stop loss, in that case it's going to be an invalidated pattern. So if we enter the trade, so that means the price moves above the neckline. In that case, we are going to get the index of the candle where it moved above the neckline. So we will validate this constraint here, and we are going to take the trade. So once we take the trade, we are going to loop through the remaining candles here and see if we hit a stop loss or take profit. So if we moved below the stop loss, so we are going to label this pattern as a loss, otherwise it's going to be a win. However, sometimes we go through all the remaining candles but we don't hit actually these 2 stops. So in that case, we simply need to see the last candle if it is above the entry price or if it is below the entry price, and we will label this as an expired win or expired loss. So you can have different metrics here, as I did in the previous video for Ishimoku. I'm not going to use actually all the metrics here, but the simple one, which is the win rate, that I will explain later. However, for each pattern, I will store the results here, and after that I will pass this result to this last function, which is about the statistics. It will give me the number of wins, number of losses, expired wins, etc. And we can use the win rate as the simple metric. So because we are taking only the same size for the profit and the risk, so basically we can have the wins, number of wins divided by the total trade we took. And if we are at 50%, that means we are breaking even. However, you need to take into consideration also the fees. So let's say this metric has to be a minimum of 60%. You can also consider the expired wins and the expired losses for the calculation. However, the amount of money here for the expired wins and expired losses are not the same, but let's say you need to have more wins in this strategy to keep it simple. So now we run the 2 functions and we see the results of the Apple stock. So if you remember, we had a total of 125 signals. We removed 25 duplicate ones because they have the same neckline, and this is the result that we are getting. So we won on 30 trades and we lost on 9 of them, and this is the expired win, expired losses. And if you can check the win rate, so basically we are above 70%, which is a good value. So after that, what we can do, we can put all what we saw here in one function to, for example, test it on other stock markets. This is what I did here. And you can run all the code, for example, on a list of stock markets here. So you can see the results. For example, the first one is going to be Nvidia. So basically we have a win rate of 70, more than 69%. You have Apple, Microsoft, Amazon, and you can add others. And you can see that for all of them, we were above 69%. So now we can run this, let's say, on the top 50 stocks on the market. Last but not least, I run this strategy on the most known stocks, about 45 here, and I classify them based on the win rates. And as you can see, almost all of them, they have a win rate which is above 60%. So only few of them actually have less than that. So this strategy actually is profitable for almost all of these stocks. And if you remember, we are taking only 1 hour of risk. So you can change this to 2 hour, for instance, and check if it give you the similar results. And we are testing it also only on daily time frames. So you have the code and you can test it also on other time frames. And you can also change the parameters that I shared with you. Thank you for watching. If you appreciate this work, you can help me by liking the video and subscribe to the channel, and see you on the next videos.